Hey everybody, welcome back to the channel. Hope you're having fantastic days and whatever trades you're in, they're all in profit. Now, one of the things as a trader, we are either fundamental or technical analysis. But always, if we are technical analysis, we're going to have that one eye on the news and understand what's going on in the bigger picture. Now, generally when we look at news articles, we look for sort of high volume events like non-farm payrolls or interest rates. But one of the big news stories at the moment is obviously the tensions around Russia and Ukraine and the potential impact that might have on the global markets. And we're now starting to see some of that coming to, potentially a lot of the fear coming in. We've seen that at the end of last week's sessions, especially around gold and the US 30. So I thought I'd take a real quick look at really just a few of the charts and see where potentially some of the fears creeping in and where people are starting to shift money either from equities into some more secure assets or maybe even speculation on some of the real high volatile ones. Now, as we know, there's lots of tensions between Russia and Ukraine and the armies are massing on the borders. NATO's been getting involved and sending loads of troops over there. But obviously all the diplomatic things are all starting to fail. We obviously said that we're going to have massive sanctions imposed. We're going to put restrictions onto what Russia can do. But the reality is, do Russia really care? Are they really that bothered by what the Western countries can actually impose on them? When you look at how they've developed over the past 10, 15 years, Russia's become one of the real dominant suppliers of gas and oil, especially into Europe. You look at the dependence we have in the UK and throughout Germany on a lot of the Russian supplied commodities. Would sanctions really stop that? Would Russia be able to pull the plug on supplying those things and really have a massive effect on a lot of the countries in Europe? So let's take a real quick look at some of the charts and see where things have moved in the past sort of one or two trading sessions and where they might go in the next part of the week, especially if the tensions continue and Russia does invade. So here we have gold on the daily chart. We can see the last bar absolutely massive. It dwarfs all of the previous buying bars for quite a while. So we can see there's obviously a lot more money flooding into safer options, and gold has always seen that sort of flight to safety where people want to take their money out of equities and move them into gold for more security. If we go down to the hourly chart, we can see that obviously previous sessions the price was building. We can see it was building up quite nicely. It did pull off towards the end of the session before a huge surge kicked in, which was pretty much a $40 move in the last couple of hours of the session on Friday. Now again, that's correlating to the US 30, so Dow Jones. We know that this has been a very, very bullish uptrend for quite a while. We take a little zoom out, we can see it's been surging up all the way through. But in the last sort of couple of sessions, it has started to see kind of a bit more of the price coming off. And if we look into what happened almost at the end of Friday, we can see price did make some new highs for the week and almost instantly fell. It got a bit of fear coming in, reflecting the same as the price of gold going up, and we see the price has dropped down almost 4%. The same correlation is also showing in the dollar index. Is obviously the strength of the dollar, again seen as a very safe way of putting money in times of uncertainty. And we can see that obviously the dollar is getting a lot more strength and momentum coming up. And again, if you look at some of the currency pairs, so GBP, that same thing has been selling off in the past couple of sessions. Again, if you look at a slightly higher time frame, 1 hour, it's now starting to make some new lows, and it could obviously come all the way back down to probably in the 1.34 range again. So oil is probably the key one to look at because this is the main commodity that Russia will be exporting, and any invasion into that sort of side could see a huge spike up in the price of oil. Now here we've obviously seen price come off a little bit in the last day or so. Again, looking in the previous sessions, but it had reached all-time highs at the end of last week. It may have come off again, but again, that could very easily start to spike up and break easily up to the $100 a barrel mark. So we can see there's definitely a lot of tension on the markets, a lot of fear coming in from what I can see. And any bad news this week, inflation reports, we look at the price of oil going up, it's going to have a knock-on effect to the pricing across the entire board. We could see some significant moves in a lot of these markets this week. Now again, if you look back to when Libya was invaded in 2011, the price of gold spiked from around about $85 up to $114. Again, a huge price range, and that could be something that happens here. Although we're not invading a country that is predominantly an oil producer, they're actually doing the reverse. The sanctions imposed could have a massive effect on the global oil supply. So that's my quick take on what the news might happen this week. Again, it's more looking at the political landscape of the news rather than actually the minutiae of manufacturing indexes or looking at non-farm payroll figures. But again, it's good to have that bigger picture to see where we might want to start looking at some trades this week. So I hope you enjoyed the quick update, and I'll see you again soon. Cheers.